Okay, let's look at the remaining chapters in this section. Even though there might be calculation in budget system, but budgetary system is mostly theoretical. Even if there is any calculation, it would not be more than the F2 level calculation that you have. Okay, obviously I will only scratch the surface of these topics, only talk about the essential things. I highly recommend studying BVP workbook, chapters plus the essential reading. Okay, let's start. Okay, first is the planning and control cycle, which means the steps involved in planning and control. The first thing we have is we identify objectives. What is it that we want to achieve? Next, finding alternative course of actions. Maybe the objective can be achieved with different strategies. So we want to select a strategy. We want to evaluate each of that strategy. Then we want to choose alternative course of action like plan B. And then we want to implement that strategy into annual budgets. That's why budget's definition is plan expressed in numbers, because budget is part of our plan. We have actually taken that and divided it into numbers. Next, we look at the actual performance and we compare with the budget the variance analysis that we saw. And then we respond to those variances. If it is favorable, we would motivate our employees. If it is adverse, we ask for the reason and punish, obviously financially. Up to the budget, it is called planning, and then they're doing the variance analysis and then responding to that is called the control cycle. That is why it is called planning and control, because they are part of the same system, and one is not effective without the other. Next, we have traditional budgeting systems, incremental budget. The budget that you usually see in organization, the budget that you usually know is usually incremental budget. Incremental simply means additional. What involves in incremental budget is you take the last year's budget and you make next year's budget based on that. Now, the advantage of that is it is easier to do. You already have the information, you already have the format of last year. If you have it in Excel, for example, you make a little bit changes and you have the budget for next year. So time saved, money saved. But the disadvantages is that last year's deficiencies, last year's budgetary slacks will be involved in this year's budget as well. Budgetary slack means making budget easier to achieve. For example, the cost of material should be 20,000, but you write 25,000 in the budget so that it is easier for you to achieve, so you could get your bonus. So last year's deficiencies are carried forward to this year. And we will be doing the same thing, the same non-beneficial things again and again. Incremental budget is used in a situation where there isn't a lot of changes to the environment, so it is significantly the same thing that the business is doing. In that situation, it would be good to use. Next, we have fixed budget and flexible budget. Remember, fixed budget is a budget that doesn't change based on the level of activity, and flexible budget is which changes based on the level of activity. The variance analysis that we did, we use flexible budget in variance analysis, because if we use fixed budget, we will always have massive variances. Obviously, when an organization makes budget, that budget is not going to be 100% achieved. Depending on the level of activity, the cost and revenue could be higher or lower. So if we always rely on the fixed budget, there could be demotivation created in employees. So flexible budget makes budget realistic creates motivation, but it doesn't mean flexible budgets are always superior. Sometimes in a situation where company is going through a hard time, you usually want fixed thing to be achieved. You don't want to give your employees freedom. So in that situation, a fixed budget would be okay. And also to explain the long-term objectives of the organization, we use a fixed budget. And if there are any changes in the short-term budgets, that would be okay. So each of them has its own advantages and disadvantages, but usually, regularly, flexible budget is okay. Next, we have zero-based budget. Zero-based budget is against the idea of incremental budget. Zero-based budget says you forget about the last year's budget. Next year, when you are making budget, start everything from scratch. For example, deleting the last year's format that you have. The idea is that last year deficiencies, last year's costs that we incurred, unnecessary costs, should not be incurred again. There are some steps involved in ZBB. First is define decision packages. So everything that you want to do in a certain year, bring it in front, and they will be your decision packages. They could be mutually exclusive or they could be incremental. Mutually exclusive is when you're doing one or the other, you have to choose one of them. Incremental packages is when you do one thing, you have to do the second thing with it. Without the second thing, it will not be effective. For example, there is electricity shortage in a company. So company decides whether to use generators or solar system. They could be mutually exclusive. Company can have both, but let's say one would be okay. Now, if you want solar system, if you buy solar inverter without solar panels, it would not be effective. So solar panel would be like incremental package. Or if you buy solar panels without the inverter, they would not be effective. And then there is batteries. Nowadays, the inverter that you have, they don't necessarily require batteries, but you could consider batteries as well in the incremental package. Then next step is ranking the packages in priority. So the thing that is most essential will come first, and the thing that is least essential comes last. And then we give resources based on priority. If we have resources for all of the things that we need to do, we will do all of the things. But let's say there are 10 things that we are doing in a year. We only have resources for 7 things, so we will do 7 things according to the priority. And whatever we haven't done, we will carry forward it to the next year. Now, it doesn't mean we will do them next year. Next year, we have to start again the whole thing again from the zero. Maybe next year again, they come in the last priority. So the benefit of doing this is that the last year's problems, last year's deficiencies are not carried forward to this year. But obviously, there is disadvantages as well. The time consuming, because you have to do everything from the start, the cost of getting all the information, and sometimes the decisions, all of them might be very essential. So it would be very difficult to rank them. Like Elon Musk once said that he had a very difficult time because his companies, Tesla and SpaceX, were in financial difficulties. So he said, I didn't have money to give to both. If I give whole money to one company, then one company would die. So he said that I give money to both of the companies, even though if I gave money to both of the companies, there was a chance that both of them would die. So sometimes there might be packages which are both essential. So it will be very difficult to decide. Next is activity-based budgeting. You saw activity-based costing. Activity-based budgeting is the opposite of that. In activity-based costing, we had the major activities of the organization. We had cost drivers, cost pools, and then we took the total cost pool divided by those cost drivers. It gave us cost per driver. In activity-based costing, we do the opposite. We look at the activities, we look at the cost driver, we look at the budgeted activity that we are going to achieve, we look at the cost per activity, which will help us decide the total budget. And also, the benefit of activity-based budgeting is that those activities that are non-value added, that we are doing, we are spending money on it, they're not essential, they will be stopped. So the idea is the opposite of activity-based costing. Next, we have continuous or rolling budget. Continuous or rolling budget is when we make budget. Let's say you're making budget a month-wise. Monthly components is there. Now it is 2022. January, you have already published your budget. January month finishes. You add another January at the end. Let's say January 2023. Now you don't just add January 2023, you update the whole budget. So the benefit of rolling budget is that we have update information, because when the January month finishes, we have update information, we consider that information and we put it in our budget. So advantages are it reduces uncertainties because the latest information has been included in our budget. We have up-to-date budget always available. We always have a budget that is for 12 months ahead. Or if you're making budgets every quarter, at least 9 months ahead. The budgets are very realistic. For example, we make a budget now, and the prices are because according to the current estimate. When January month finishes, there is a huge change in price. Because of that, our budget would not be very realistic if we use the traditional budgeting. But if we are using rolling budget, when the new information about the price is available, we update that so our budget becomes updated and realistic. Disadvantages of rolling budget: time consuming, money spent, the information would be very difficult to achieve, to update the budget sometimes. And you will be doing this regularly, so it would be a little bit tiring. Next, dynamic conditions making original budget inappropriate. Remember, we make budgets, but it doesn't mean we always have to achieve it, or it always is going to be realistic. Sometimes things change because of which our budgets would not be realistic. And sometimes we go beyond budget. So what are the things? Organizational change. We have changes in the structure of the business. We have changes in the product that we are selling. So huge change happened to the organization because of which the original budget is not realistic. New technology. We have bought another technology. The old technology was very slow. The time it was taking was higher. The cost was higher. Because of the new technology, the cost, the time, and the output has increased. So the original budget would not be realistic. Environmental consideration. Change is happening to the environment. Maybe you are selling something, a product that is used in winter, but because the winter was not as strong, you were not able to sell your product as much as you expected. Inflation. As I previously explained, the budget that we made was based on our estimate now, but because of the price changes in the market, our budget would not be realistic. Okay, sources of budget information. Where can you get information for the budget? Past data, like in incremental budgeting, you take the last year's budget and you just add it to this year and you change a little bit, and that becomes your budget. Sales forecast, you look at, you studied in F2, whenever we are making production, labor, or material budget, we look at the sales forecast, and from that we make our budget. Production department costing information. So if we look at the production department, remember the steps again in F2 level, we make the sales budget. From sales budget, we make production budget, and from production budget, we make the other budgets relating to cost. Whenever we are making budget, we should always be flexible. We should allow for uncertainty. Allowing for uncertainty means we should always have this in mind that conditions could change, and because of which our budget would not be realistic. One thing we could do is using flexible instead of fixed budget, rolling budgets, as already explained, probabilistic budget. Instead of having 50,000 or 100,000 or 150,000, we could have average of all of these, or using sensitivity analysis. Remember these things we studied in risk and uncertainties. Okay, difficulties of changing budgetary practices. Remember, if employees are already using incremental budgeting and then you are changing that to rolling budgeting, or you are changing that to ZBB budgeting, what could be the problem that you achieve? Resistance by employees. Usually changes are not liked by employees. I was giving training to an organization here, and I saw employees didn't like the training because they were using Excel and they were very familiar with Excel. So I was giving QuickBooks training and they were not motivated because that sense of control is lost, which is the next thing, loss of control. They already are familiar with the old system, so they don't want the new system, because of which they will lose control. Time-consuming and expensive training. Obviously, if you are introducing the new system, there will be cost involved, and it will require their time that they could spend in the business activity. Cost of implementation, the cost of the system, the computerized system that you're doing. Lack of accounting information and system is in place. Maybe the employees that are doing things, they have specifically learned those things. Maybe they have memorized them. They don't have a lot of accounting information. When you're introducing a new system, they don't know, they don't have the accounting knowledge to support that.